Are mortgage rates finally ready to break out of their sideways grind? Or are we gearing up for more of the same? And what the heck do tariffs have to do with your house payment in Boise? Hey, I'm Mike Petras with MPRE Boise, powered by Next Home Treasure Valley, and this is your weekly mortgage rate update for the greater Boise, Idaho area, covering areas like Boise, Meridian, Eagle, Nampa, Caldwell, Kuna, Middleton, and Emmett. But before we dive in, go ahead and hit that like button, hit the subscribe button below, hit the notification bell so that you're constantly in tune with these videos, and feel free to share this with anyone trying to make sense of what's happening in the real estate markets. So let's go ahead and get into it. This week was a classic example of sideways tension. Well, we opened Monday with rates sitting at 6.76%, right in the middle of the 5-week range that stretched between 6.70 and 6.82%. Well, that range has been holding firm since late February, and Monday was a textbook example of the market finding comfort in the middle of that channel. Tuesday gave us a little bit of good news, nothing groundbreaking, but enough to keep the momentum slightly positive. We saw weaker ISM manufacturing data, along with a drop in the jobs openings and job quits. And that was enough to nudge rates down to 6.74%. Modest, yes, but notable because it marked the third day in a row of gradual improvement. But then Wednesday brought the fireworks. The long-awaited tariff announcement dropped late in the afternoon, and markets reacted in true whipsaw fashion. The bonds rallied, stocks tanked, and while most lenders didn't reprice by the end of the day, the message was clear. Global policy matters to your mortgage. Rates essentially stayed near 6.74%, with most movement happening outside the rate sheet windows. Thursday was the big breakout. Market chaos intensified as stocks plummeted and bonds rallied hard. Add in weaker than expected ISM services data, and it was a full-on risk-off day. And that finally pushed rates to around 6.69%, the lowest we've seen since mid-October. And then came Friday. Normally, jobs report Friday is the main event, but this week, it played second fiddle. China dropped its own set of retaliatory tariffs at 6 a.m., sending bond yields and stock indexes tumbling. And that early panic pushed mortgage rates as low as 6.67%. But by the end of the day, most lenders landed closer to Thursday's 6.69%. The story of this week wasn't just about scheduled economic data. It was about tariffs, market psychology, and how fragile investor confidence has become. Monday started with a reaction to Trump's comments about a 20% blanket tariff across the board. That kicked off a flight to safety, with investors pouring into bonds and dragging yields and rates down with them. Tuesday's data didn't deliver huge surprises, but it leaned in a bond-friendly direction. ISM manufacturing came in a little softer than expected, and job openings and quits both declined. These are the kinds of signals that tell investors that the labor market is cooling, even if it's not in trouble yet. That makes bonds more attractive, and that helps stabilize mortgage rates. Wednesday's ADP employment report was stronger than forecast, but it didn't have the usual power. And why? Because everyone was waiting for Trump's 4 p.m. tariff speech. The initial reaction was mixed. Markets hated it, bonds rallied, and stocks tanked. But because the announcement came after most rate sheets had been published, it didn't impact daily pricing that much. But by Thursday, the reaction to tariffs and weak ISM services data really gained traction. And we saw a clean, sharp rally in bonds, pushing rates down to a level we haven't touched since mid-October. And then Friday arrived with a curveball, China's retaliation. And despite a solid U.S. jobs report, the early market panic over tariffs way overshadowed everything. And that kept rates suppressed, with the average top-tier 30-year fixed hovering right around 6.69% to close out the week. So now the big question, should you lock in your rate or float into next week? Well, if you're already under contract and your current pricing works, this might be a good time to lock. Well, while we hit the best levels in nearly 6 months, that's not something to take for granted, especially when the market is this jittery. But if you're still house hunting and you've got some flexibility, there's a chance we see more downward movement, especially if next week's economic data comes in soft. But know that the risk goes both ways. One hot inflation report or one geopolitical twist, and we could be right back above 6.75% in a blink. So what's coming next week? Well, next week is also going to be crazy, so buckle up, everybody, and watch out for this data. Tuesday brings the NIFB Small Business Optimism Report and Consumer Credit, both of which could hint at where the economic confidence stands. But the real focal point is when we get to the Consumer Price Index, or CPI. This is the market's favorite inflation report, and it's coming at a critical time. If CPI comes in hotter than expected, it could shatter this week's bond rally and force mortgage rates higher. But if inflation softens, we could finally see rates dip closer to that magical 6.5% territory. And remember, lenders have different rates. So rates could very well drop into the low sixes or high fives. Thursday brings Producer Price Index, or the PPI, which measures wholesale inflation. Now, it doesn't carry the same weight as the CPI, but it adds context. And Friday, we close the week with the University of Michigan's Consumer Sentiment Report, a key gauge on how people feel about inflation and the economy in general. But the bottom line is, this week was a technical win for rates, but next week will test whether that win has any staying power. So what's your move? Are you playing it safe, locking in those low rates now, or are you hoping next week's data delivers a little more fuel for this rally? Let me know in the comments below. I'd love to hear your take. And don't forget, hit the subscribe button below, hit the notification bell so that you're constantly in tune with this video, and please feel free to share this video with anyone keeping an eye on the Treasure Valley housing market. This information is critical, especially right now. And whether you're buying or selling in Boise, Meridian, Eagle, Nampa, Kuna, Caldwell, Star, Middleton, or Emmett, I can help. Or if you're relocating to other states such as Oregon, Washington, California, Nevada, Arizona, Tennessee, or Florida, I've got great loan officers that will be able to help you make that move. So while I am a realtor and not a lender, please feel free to reach out to me. I'd love to get you in contact with great loan officers that can help you in these states. Well, thanks again, everybody, for watching. I will see you next week. God bless. And I look forward to the day that I call you my neighbor.